So the market's gotten hammered this September, especially small cap stocks, small companies. And there are really two things that have been driving this. For most of the month, the big cause was the Fed. A lot of Wall Street investors believed, wrongly, in my view, that the Fed was going to cut rates. And that doesn't really jive with the data that I'm looking at. In my view, the Fed probably has to raise another quarter point because inflation is still biting. Take a look at these UAW negotiations, the strikes that they're doing at Ford and GM and Chrysler. Basically, what they're asking for is a 40% increase in their wages. Now, whether you think that's a good idea or not, that's another story, but that's inflation. That's inflationary. McDonald's was forced by California to raise their minimum wage of their people that work at their restaurants in California up to, I think, $20 an hour. Again, that's inflationary. So basically, you still have inflationary ripples pushing through large portions of the US economy, which is forcing the Fed to stay with higher rates for longer so it doesn't ripple through too hard. And it looks like really that's starting to take a bite now. If you look at home sales, those are starting to go down. If you look at car sales, they're starting to go down. Rents are starting to go down. So basically, this blunt force instrument of interest rates really, is starting to drive prices down. And remember, it pays to look at interest rates like a seesaw relationship. Interest rates go down, stock prices and real estate goes up. Interest rates go up, stock prices and real estate go down. So it's like a seesaw relationship. So when the Fed's raising rates, asset prices go down. So we find ourselves in that situation. The other reason that's really caused the market to unravel a bit this week has been the risk of a government shutdown. It looks like, and again, I don't like to delve into politics when it comes to business, when it comes to the markets, but I focus more on policy as opposed to politics. But in terms of policy, a lot of folks can't believe that literally the government might shut down in days. We might be 48 hours away from a government shutdown, which nobody really believed was quite possible. Everybody thought that McCarthy would get those House Republicans in line at some point, but it doesn't look like that's going to happen. The cost of that would be significant too. So basically, the big reason driving the market sell off this month has been the Fed. And this week it's gotten a little bit tighter because of the threat of the government shutdown.